There's a lot of underqualified people on the internet that try to overcomplicate taxes, but it doesn't have to be that way. I'm a qualified accountant, and in this video I'm going to show you 22 ways you can instantly and practically reduce your taxes to save yourself thousands every year. And no, it does not include setting up complex tax structures. Whether you're a student, professional or business owner, there will be a combination of methods in here that I guarantee you aren't aware of that can save you loads of money with just the click of a button. The first and only thing you need to understand before we go through these methods is the concept of income versus taxable income. Income is effectively the amount of money you make in a year. Taxable income, on the other hand, is this same figure but factoring in deductions and exemptions based on the tax code implemented by the government. Once these deductions have been accounted for, the tax rate is then applied to that amount of money, and that's the amount of tax you pay. So naturally, we want to load up as many of these deductions as possible to ensure you pay as little tax as legally possible. That will be the primary focus of the video, and you'll be shocked at how much you can save. So let's start with number one, which is standard deductions versus itemizing. We need to understand when to take the standard deduction and when to itemize. Effectively, this is just the set amount that the government offer you to deduct from your income instead of listing out all of your deductible expenses that you may have. For many, the standard deduction, which was nearly doubled by the Tax Cuts and Jobs Acts, will be the best choice. However, if your allowable itemized deductions exceed the standard amount, itemizing can save you a lot more money, so check on this. Common itemized deductions include mortgage interest, state and local taxes, charitable donations, and for the 2024 tax year, the standard deduction amounts, which are set by the IRS, are approximately $14,600 for single and $29,200 for married filing jointly. So this will be your baseline to compare your deductible expenses against. The primary advantage of the standard deduction, of course, is its simplicity. It requires no additional documentation or calculation. 2 is incorporating a side hustle. Moving on to a strategy that's becoming increasingly relevant in today's gig economy is incorporating your side hustle. If you're earning any amount of money from a side gig, turning it into a formal business entity could offer really valuable tax advantages. The benefits here, whether you incorporate as an LLC, an S-Corp, limited company or other business structure, can provide you with tax deductions for business expenses, potential savings on self-employment taxes, and in some cases, more favorable tax treatments on profits. Now I'll run through a few of my favorite deductions you can use once you do this. So number 3 is the home office deduction. This is a way to reduce your taxable income by deducting expenses for part of your home used regularly for business activity. To qualify, you must use a portion of your home regularly and exclusively for conducting business. This means the space should be dedicated solely to your business activities. It doesn't have to be a separate room, but should be a clearly defined area of your home like an office. The IRS offer 2 methods for calculating this deduction: the simplified option and the regular method. The simplified option allows you to deduct $5 per square foot of your home office, up to 300 square feet. The regular method involves calculating the percentage of your home used for business and applying it to home expenses like mortgage interest, insurance, utilities, repairs, and depreciation. On that note, number 4 is home utilities and maintenance. If you qualify for that aforementioned deduction, you can also deduct a portion of your home utilities and maintenance. This includes electricity, cooling, heating, and general repairs. The deductible portion is based on the percentage of your home used for business. Number 5 is legal and professional fee deductions. Self-employed individuals can deduct legal and professional fees that are necessary and directly related to running their business. This includes fees for accountants, lawyers, and other professionals. Ensure these fees are strictly business related to qualify for the deduction. Next is depreciation on business equipment and property. This allows self-employed individuals to spread out the costs of expensive business equipment over several years. This includes computers, office furniture, vehicles for business use. The IRS provides a guideline on how to calculate this depreciation, which can be complex, so consulting a tax professional might be beneficial in this one. Let's talk about travel, lodging, and expenses for business. Business travel expenses, including airfare, hotels, car rentals, and even portion of your meals are deductible. Again, to qualify, the travel must be primarily for business and away from your tax home. Keep detailed records and receipts of all of these transactions to substantiate your deductions. This is one that I see a lot of people miss out on, which is vehicle use for business purposes. When using a vehicle for business, you can deduct vehicle expenses. There are 2 methods here again: the standard mileage rate, which is 57.5 cents per mile, or the actual expense method, which is deducting the business portion of expenses like gas, insurance and maintenance. Again, detailed records of mileage and expenses are crucial. This is a really interesting one, which is professional development and continuing education. Expenses for courses or trainings that maintain or improve skills required in your current job are deductible. This includes tuition, books, supplies, lab fees, online courses, or similar items. These expenses do not qualify for the deduction if they are needed to meet the minimum educational requirements of your current trade or business. Number 10 is investment interest. If you borrow money to invest, you may be able to deduct this interest paid on the loan. This deduction is limited to your net investment income, which includes interest, dividends, and some royalties, minus other investment expenses. Careful recorded keeping is essential to support this deduction. Next is educator expense deductions. For educators like teachers, the IRS offers a deduction of up to $250 for unreimbursed expenses for classroom supplies. If both spouses are educators and file jointly, the deduction can be up to $500. Qualifying expenses include books, supplies, computer equipment, and other materials used in the classroom. This is an above-the-line deduction, so you can take it even if you don't itemize, which is super helpful. A really important one here is to maximize retirement contributions. Contribute to your retirement accounts like a 401k or an IRA. Contributions to these accounts are often tax deductible, lowering your total taxable income. For 2024, you can contribute up to 19.5k to a 401k and 6,000 to an IRA, with additional catch-up contributions if you're over 50. These next couple are going to be along the same lines, so utilizing a health savings account. If you have a high deductible health plan, contributing to a HSA can provide triple tax benefits, which is tax deductible contributions, tax-free growth, and tax-free withdrawals for qualified medical expenses. In 2024, the contribution limit is $3,650 for individuals and $7.3k for families. Similarly, contribute to a flexible spending account or FSA. FSAs allow you to set aside pre-tax money for certain healthcare and dependent care expenses. For healthcare FSAs, the limit is $2,850 for 2024. Just be mindful of the use it or lose it policy here. 15 is to claim the earned income tax credit if applicable. The EITC is a valuable credit for low to moderate income workers. The amount varies based on income, filing status, and the number of children you have. Many eligible taxpayers miss out on this credit, so be sure to check if you qualify. 16 is to take advantage of the child tax credit. For those with children, the child tax credit can offer significant savings. The credit amount varies again, and part of it is refundable, meaning it can reduce your tax bill or increase your refund, which is great. 17 is education credits and deductions. The American Opportunity Tax Credit and Lifetime Learning Credit can help offset the cost of higher education. This is a really important one to look into. There's also the tuition and fees deduction for other qualified educational expenses. Along the same lines here is to deduct your student loan interest. If you're paying off your student loans, you may be able to deduct up to $2,500 of the interest paid annually, depending on your income. This can really offset that overall burden of student loan repayments. Next is an obvious one, which is charitable contributions. These contributions can be deducted if you itemize. Cash donations, non-cash items, and even mileage driven for charitable services are deductible. Number 20 is a deduction for long-term care insurance premium. This is particularly relevant as you plan for the future. The deduction for long-term care insurance premiums is effectively a deduction based on insurance policies. The amount you can deduct depends on your age and is adjusted annually for inflation. For example, individuals over 60 but not over 70 can deduct a larger portion compared to those who are younger. This deduction is particularly valuable as it helps offset the cost of preparing for potential long-term care needs. Number 21 is casualty and theft loss. This deduction, as the name implies, applies in unfortunate circumstances such as casualty and theft loss. This often overlooked deduction allows you to deduct losses from property damage or theft, as long as the loss is a federally declared disaster. This can include damages from natural disasters, floods, or wildfires. To claim this deduction, your total loss must exceed $100 and 10% of your adjusted gross income. You also need documentation like insurance reports and police reports to substantiate the claim. Last but not least, Let's cover a very unique situation that I actually randomly encountered recently with a client of mine, and that is jury duty pay given to the employer. Many people don't realize that if they give their jury duty pay to their employer, which is a common practice when the employer pays your salary during the jury duty, you can deduct that amount from your taxable income. This deduction is for the amount you pass along to the employer. It's a way to avoid being taxed on income you never actually received, so be sure to keep a record of the jury duty pay and then transfer to your employer to validate the deduction. So those are 22 deductions and ways to reduce your tax every year. This should really bolster the tax refund or lower the tax payable you have this year. The next step is to start implementing some of the additional core money habits that are really going to accelerate your financial growth. I've run through 9 that I think aren't talked about nearly enough on YouTube, so if you're interested, click here. Thank you so much for watching. Please make sure you like the video and subscribe to the channel, and I will see you all in the next one.